Hi everyone, I'm Devon Coombs, and today I'm going to go over a little more complex journal entry, going over contract assets and unbilled AR for services. And so I'm going to get a little more complex here and introduce both the concepts of contract assets and unbilled AR, and we'll dive straight into this. And so just know this is a little more complex, but wanted to introduce it because ASC 606, the new revenue recognition standard, is so important. And I believe it's an essential business topic that we need to cover. And so let's go over these facts and circumstances. So between December 1st, 2019 and December 31st, 2019, Coombs Inc. performed $1,500 in services on a T&M, time and material basis, as part of a fixed fee project that will be completed on January 31st, 2020. And so that's the key there, is that it's a fixed fee project. This fixed fee project piece is key. We're working on something that the customer is expecting a kind of combined service or project to be completed. So we're not just performing hourly services, even though we're charging on a time and material basis. So Coombs Inc. did not bill for these services on December 31st, 2019, but it's going to bill for them on January 31st, 2020. But Coombs Inc. does have an unconditional right to payment for this $1,500 and does expect it. And so in this fact and circumstance, we are working on a project. That project is going to be completed on January 31st, 2020, but we need to recognize some kind of revenue as we've earned it or as we're satisfying the performance obligation in 2019 based on the revenue recognition principles on ASC 606. So this is different than old revenue guidance where we might be recognizing as invoiced, but now we can't recognize as invoiced. We have to recognize as we perform the performance obligations. And so there's two ways we can look at this, and it depends on accounting policy and really a little more detail. But it's either considered unbilled AR or contract asset. And so unbilled AR means that we have the right to have billed this $1,500 amount in December. We were just performing it on a time and materials basis, but we didn't bill it. So we decide we need to recognize an unbilled AR account, which would be part of our accounts receivable. Or we have a contract asset, which means we didn't have a right to bill it yet, and we still have performance obligations left to satisfy, but the fixed project isn't complete yet, but we have performed towards it. And so either of these situations, there's not enough facts and circumstances in here to interpret if it's unbilled AR or contract asset. So I wanted to introduce both. I purposely did that because I wanted to introduce both concepts here and just so you to see how we were recognizing revenue. So in this situation where we haven't billed yet, we can still recognize revenue under ASC 606. And that's a key concept now that everyone needs to be aware of, that we don't need to wait for invoicing to recognize revenue. So let's see how that impacts our financial statements and our P accounts. So do our debits equal our credits? Yes. So the contract asset unbilled AR is an asset account, and it's going to be current asset because it's less than a year. And then our revenues are our sales of $1,500, the services. So debits equal credits, so we can move forward and make our financial statements. This increases our revenue, so our revenues increased by $1,500 from our prior revenues, and now our net income is $9,450, which will then flow into our retained earnings here. And that retained earnings increases our balance sheet here, right? The accounting equation, do our assets equal liabilities and equity? They do. The $24,950 is going to equal the $24,950 over here. And then what increased here is now we would have an contract asset or unbilled AR of $1,500, which is how the retained earnings increased. So our assets increased and our equity increased in equal amounts. And what that means is our assets increased based on what we own, which is our equity, right? Our operations funded an increase in assets. And so key point here is that collectability has to be assured. It has to be probable that we are going to collect on this $1,500. We just have either not billed for it yet, or it's part of a larger project that we have to still satisfy some performance obligations regarding. So I'm going to go more into ASC 606 in separate slides. It's a complex concept for intermediate or advanced accounting, but just wanted us all to be aware that we can recognize revenue even if we haven't invoiced the customer, as long as we satisfy the performance obligations. And then how would this be adjusted in our statement of cash flows? It'd be part of our contract assets unbilled AR as a reconciling item to net income. So net income would increase, but because we didn't collect cash for this amount, we would decrease it in our adjustments column, which so our net cash provided by operating activities wouldn't change at all. We would still only have $8,000 because we didn't receive cash, right? There's no debit to cash or credit to cash in this journal entry. And that's it. So really want to stress that that revenue can be recognized before billing, and that if this is unbilled AR, it might be classified under accounts receivable depending on accounting policy elections. I know this is a little more complex of a subject, but important for introductory accounting students to get. So thank you very much for watching. If you have any questions, feel free to write in the comments below, and please subscribe to my channel. Have a great day. Bye.